The domino effect that followed the collapse of the Terra cryptocurrency in May 2022 caused most of its casualties quickly. Within a year of the failure of the algorithmic stablecoin, bankruptcy filings from Celsius Network, BlockFi, Voyager Digital and FTX had been filed, and once charismatic crypto CEOs were in court or in jail. Now, with Bitcoin breaching $40,000, the crypto sector finally seems to be rising from its December 2022 nadir. For Barry Silbert and his Stamford, Connecticut-based digital currency group, however, the repercussions of Terra's collapse have been like quicksand. His Genesis Global Capital Lending Unit filed for bankruptcy protection in January, but the conglomerate still has more than 160 companies in its vast investment portfolio, including crypto miner Foundry and digital asset exchange Luno. Then there is the crown jewel, Grayscale Investments, which runs the world's biggest Bitcoin fund with a juicy 2% expense ratio on $27 billion of assets. Despite the rally in the price of Bitcoin, shares of its flagship GBTC closed-end fund continue to trade at an 11% discount to its underlying Bitcoin value. Last month, DCG sold its news website CoinDesk to Bullish, a crypto exchange led by Tom Farley, former president of the New York Stock Exchange, for an undisclosed sum. As Silbert's crypto winter continues, the former billionaire faces a host of serious problems. New York Attorney General Letitia James seeks to ban DCG and Genesis from doing business in her state as a punishment for allegedly defrauding investors by trying to conceal more than $1.1 billion in losses linked to the collapse of Singapore-based Three Arrows Capital. The crypto hedge fund had been one of the largest Genesis borrowers. Cameron Winklevoss, president of the Gemini Crypto Exchange, which was also named in James's lawsuit, has also accused Silbert and DCG of fraud against Gemini depositors. The Federal Bureau of Investigation, the Securities and Exchange Commission, and state officials were looking into the allegations, Bloomberg reported, citing people familiar with the matter. Genesis accused its parent of treating it as a de facto treasury without appropriate corporate controls. It is asking DCG to repay more than $320 million of loans, initially due in May 2023, by April 2024. According to the proposed bankruptcy plan filed on November 28, DCG has agreed to the new terms. Many Genesis creditors refused DCG's initial recovery plan offered in September. The new plan allows for the possibility that Genesis might sue DCG on several grounds. DCG says such claims are without merit, and Genesis says it would prefer to settle rather than pursue its former parent in court. The fraud charges cited by New York include the allegation of stuffing the Genesis balance sheet with a questionable $1.1 billion 10-year promissory note, which came from DCG and that Genesis represented as a current asset.